The banking families that funded wars. There were wars that looked inevitable. There were wars that looked political, and there were wars that only happened because money allowed them to happen. This is not a story about generals. It is not a story about flags or speeches. It is a story about the people who made war affordable. Because wars are not fought with belief alone. They are fought with credit. At first glance, these wars look chaotic. Different nations, different rulers, different reasons. But behind them was a system that stayed consistent. A system that decided who could fight and for how long. This story looks like history. In reality, it explains power. By the early modern period in Europe, wars had changed. They were no longer short campaigns. They were long, expensive, and industrial in scale. Armies had to be paid. Weapons had to be produced. Supply lines had to be maintained. Kings quickly learned one thing. Victory depended less on courage and more on financing. In the 17th and 18th centuries, European states were almost permanently at war. Borders shifted constantly. Alliances changed, but the costs kept rising. Rulers faced a problem. Their treasuries were limited. Taxes were slow, and wars could not wait. This is where banking families entered the story. At this time, formal national banks were rare. Governments relied on private financiers, families who controlled credit networks across borders. They were merchants first, bankers second, and political actors by necessity. These families operated in multiple cities at once. They moved money faster than governments could. They understood risk better than generals did. One of their greatest advantages was neutrality. While states fought, bankers remained connected to all sides. Money does not care about flags. It cares about repayment. When a ruler needed funds, he had two options: raise taxes or borrow. Taxes caused unrest. Loans created dependency. Most rulers chose dependency. Once a government borrowed to fund a war, it rarely stopped. Interest accumulated. New loans paid old ones. Debt became permanent. This created a quiet shift in power. Wars no longer ended when treasuries emptied. They ended when credit was withdrawn. Banking families did not command armies, but they decided whether armies could continue to exist. They funded weapons production. They financed supply contracts. They advanced money before taxes arrived. In return, they demanded guarantees, land revenues, trade privileges, future tax income. States became clients. As wars grew larger, so did the financial system behind them. Information became as important as money. Bankers maintained private courier networks. They received news faster than governments. They adjusted lending based on battlefield outcomes. A battle lost could change interest rates overnight. This system rewarded stability, not victory. A short war was manageable, a long war was profitable. As conflicts stretched on, governments lost leverage. Stopping a war meant default. Continuing meant deeper debt. The choice was often simple. Borrow more. This dynamic shaped entire centuries of European conflict. Wars between great powers were no longer just military contests. They were financial endurance tests. Whoever could borrow longer survived longer. Banking families understood this. They structured loans to outlast rulers. Kings died, debts remained. Over time, these families gained influence without holding office. They advised governments quietly. They shaped peace terms indirectly. A state heavily in debt could not afford instability. It needed predictable outcomes. Bankers preferred balance, not domination. When one power grew too strong, risk increased. When powers were evenly matched, borrowing continued. This created a paradox. Wars destroyed nations, but they strengthened the financial system. Entire economies reorganized around war finance. Industries expanded, employment shifted, trade routes adapted. War became an economic engine. The people paying for the system were rarely visible. Taxes rose slowly. Inflation absorbed costs quietly. The public saw flags and uniforms. Behind them were ledgers and contracts. This changed how rulers behaved. Decisions were no longer purely political. They were financial calculations. Could this war be financed? For how long? At what interest? Military strategy followed credit availability. When financing tightened, diplomacy appeared. When credit flowed, wars resumed. This pattern repeated across regions and generations. The system also shaped alliances. States aligned not just by ideology, but by credit compatibility. A government deeply indebted to one financial network could not easily oppose another client of the same network. Neutrality on paper often meant alignment in practice. This system rewarded discretion. Banking families avoided publicity. Visibility increased risk. Their power worked best when unnoticed. They did not need control, they needed access. As national banking systems later developed, this model did not disappear. It evolved. Private finance merged with public institutions. Debt became standardized. War bonds replaced private loans. The logic remained unchanged. Wars still required funding before justification. And funding still depended on confidence. Confidence in repayment. Confidence in stability. Confidence in the system. This is the part history often overlooks. Wars are remembered as moral struggles. They are planned as financial operations. The families who funded wars did not start conflicts. They enabled them. They provided the oxygen. Without financing, wars collapse quickly. With it, they can last decades. This is why some wars feel endless. They are sustainable. The system does not reward peace. It rewards predictability. Peace ends contracts. War extends them. Over time, governments learned to manage this dependency. Regulations appeared. Central banks emerged. But the relationship between war and finance never broke. It simply became more complex. The visible actors changed. The system did not. This pattern explains more than history. It explains behavior. Why wars escalate slowly, why they resist resolution, why economic stability is often prioritized over human cost. The system optimizes for continuity, not morality. Understanding this does not justify wars, it explains them. History does not repeat, but incentives do. When power depends on financing, those who control financing shape outcomes, quietly, consistently, and across generations. If this changed how you see history, you already understand more than most.